Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Okay, everybody, let's take a look and see what happened in the stock market today. We're going to shotgun through all of the futures products. Okay, this was today's candlestick right there. That one. This is the new one that just started already. Okay, so what do I think is going on here? Well, the daily cycle is probably most likely already happened. The daily cycle low, which was 1226. Some of them are at, I talked about this for the last 2 weeks. I said some of the daily cycles are at 1223 or 1221. Let's see, what was this one? Yeah, 1222, guys. Okay. So just to show you, what am I talking about cycles? Well, you got the green cycle. For those who don't know cycle analysis, that's an arc right there. Okay. And then we have the little red ones in here too. Okay, so there's different cycles going on here. All right. So just looking at the red ones, okay, I projected that we would have a cycle low right around December 22nd, okay, which was yesterday. Okay, guys, how good is that? I mean, here is the projected low, right about right there on that candlestick or this one, and it happened right there. Happened on the 20th, and this was projected for the 22nd. How much more accurate can you get? That cycle low came right on time within like a day or two. Okay, you really can't ask for better. Cycle analysis is very good. If you know how to use it, you can make a lot of money. So what is my take now? Well, this is the new cycle right here. Okay, so we should get a price. Generally speaking, we get price increase, and we've done that. We've seen 2 days go up. Okay, we may get all-time new highs in here. We'll just see what happens. Okay, the 50-day is this monster, right? It's still pointing up. There is no indication of man, guys and gals. I see these YouTube content creators every day. Crash, crash, crash. I mean, it gets to be ridiculous. There is no crash, not yet. When we see the 50-day flatlining and turning down, then maybe we can start talking about corrections and crashes. But there is no crash because the 50-day moving average is going this way. And until it does otherwise, there is no crash. Let me go click on clickbait video. Click, 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 click. Oh, crash, crash, crash. You don't get that on this channel. I don't just arbitrarily come out and talk about crashes every day just so I can get your clickbait. No, I keep it real on this channel, okay? And right now, it looks like to me we're going to get some price increase. We'll see what it does. Does it stall? You know, because there's a lot of market manipulation going on here, right? It's obvious. All kinds of market makers and Federal Reserve doing their happy dance on everybody. Okay. So we have a hybrid of a free market. It's not a free market, guys and gals. It's a hybrid market. It's like socialist controlled free market / whatever you want to call it. Okay. It's not a free market. That's total BS. Anybody that believes that, you got your head buried in the sand. Okay, so, but anyway, my take on this is that, we've already seen a pretty decent price increase coming up into this new cycle. All right, and we'll have to wait to see if it continues. Okay. Right now, we've just been getting the seesaw, right, up and down and up and down. So let me talk about a little bit of geometry here for everybody. So what this right here, and I've talked about this before, and it's worth mentioning. We're gonna pretend like this is a lake of water or a body of water. Okay, everything in here is a body of water. This is a body of water. Okay, and this line I drew on the outside, that's the shoreline. Okay, body of water. Okay, and let's do the next one. It's kind of like, it doesn't really matter the shape. I mean, we're not too concerned about shape. Okay, and it's like that. That's a body of water too. Look how much smaller it is. Big body of water, small body of water. Okay? So let's go back and look at something in history here. Well, before I go on, okay, let me just talk about what I think could potentially happen. What could potentially happen, it doesn't always happen, but what could potentially happen here is that we get a really small body of water. One like that, inside this little space right here. Okay? That's very common. Big, medium, small. And sometimes it'll just, after you get the small one, it'll just ride along to 50 and eventually break. Okay? So we may get that. And I know there's people out there that hate to hear me say may and if. Well, guess what? That's called probability. And I've talked about this before. If you want the ultimate YouTube channel or some type of subscription-based website that gives you 100%, they're always hit at 100%. They're a multi-billionaire. And every day they nail it. 5 days a week, they 100% nail what the market's going to do. By all means, go subscribe to that YouTube channel. Let us know, and we'll all subscribe together. And everybody will be millionaires. But my guess is that doesn't exist. So instead of beating me up on this channel and coming here and talking about how ifs and maybes aren't technical analysis, yes, they are. It's called probability. If you don't like it, hit the road. Go to some other YouTube channel. Unsubscribe and hit the road. Doesn't bother me at all, because I would rather be real on this channel than be clickbait baloney. All right, so back to the video here. I think there's a probability that we're going to get a small body of water. Okay, I don't know exactly how it's going to play out, but I think it'll be potentially smaller than this one. So big, medium, and then really small, okay? And if that happens, then a lot of times you get a break below, all right? But sometimes they'll go big, medium, small, and then break up and break to the upside, okay? So I'd be looking for the potential small geometric body of water, okay? People can relate to that. That's why I talk in those terms, okay? Let's take a look at this throughout the summer. What did we get? A pretty big body of water, pretty big, but a little bit smaller. And then it broke to the downside, little tiny body of water. Sometimes that body of water, instead of being below, would have been above. It would have happened right there. Follow me? Sometimes it'll happen below the 50. Then we got a decent sized body of water and it broke to the upside. And you got this huge body of water. Okay? So we'll be looking for that. That's just a geometrical shape that you can kind of store in the back of your mind there, or jot it down and be looking for it. Okay? It could happen. And that's useful information if it does happen. But for right now, it looks like to me, we've got these two daily cycles that are kind of, in the same area, and I think we're going to get some price increase. Okay? How long is that sustained? I don't know. Okay? We'll have to wait to see. Because the end of the year can be tricky. There's a lot of games going on with market makers and all kinds of stuff at the end of the year, okay? Very common for tax reasons and all kinds of stuff, all right? All right, so let's move on to the monthly, okay? What do I see? I see a fairly strong candlestick because it's green. I see the potential for long-term still going up, but I see a really big divergence warning going on here. It hasn't changed. There's a divergence. Price is going that way. These indicators are going this way. Okay? Usually at some point that turns into a price decline. Okay? And it comes down at least somewhere near the 50. And guys and gals, just so you know, even though this is a nice rising 50, this will come down close to the 50 or touch it at some point. And right now we're talking about a 1,000-point drop minimum. It's going to happen. I said this before and I'll say it again. We will have at least a 1,000-point drop in the stock market. It's all a matter of not if, but when. Okay? So that's reality. It will happen because it always happens. And then you all can talk about the real stock market crash, or at least a really big correction, or maybe even a bear market for a little while. Okay? Could be a year or two or months, whatever. All right, weekly chart. What do I see? Well, I see temporary strength here. These indicators are turned, okay, and they look like they're strong. The MACD often on the weekly has flatlined and gives us nothing useful, but the short-term indicators, they look pretty strong. I think potentially these dots right in here, okay, that's false flags. It happens after you get a dip. So we'll just see, is this sustainable? Will these indicators come back up and get above their top line, okay, because they haven't done it yet. So we're not in the, hey, a confidence of the market's going to go long and it's going to go up. We're not really there yet. But it looks like there's some strength, a little bit of strength here in the market, okay? All right, premium members, let's switch over to the hourly chart. By the way, for premium members, I'm going to put a link in the description on the premium member only video. And in there is going to be a link to my business profit channel. And I think you're going to like the video. Something definitely different that I had to take care of. Okay, and I had to spend some time doing, okay, because small businesses have to be very proactive and innovative and do things that a lot of big businesses don't have to do. At least the business owners don't have to do it. But when you're a small business, sometimes you got to take the bull by the horns. So watch the video. It's in the link. Very cool video. I think a lot of people are going to like it. Okay. It'll kind of give you a heads up of how small businesses have to adapt. Okay. All right. So let's look at the hourly chart. What do I see here? So that was yesterday, which I didn't do a video on because I was busy doing other stuff. Okay. But this was today's session right there. This is the new session that just started. Okay. What do I see? I see a bunch of garbage overnight, not tradable. But I see at about 8 a.m., the market decided to go happy dance. Okay. Definitely tradable. Especially that candlestick right there, guys, at 9 o'clock in the morning. A lot of you that know me already, you know what I'm going to say. Second candlestick should get traded. Soon as it gets above that upper wick, trade the heck out of it. Okay? For you new trader, for you new people, premium members, welcome to the channel. My take on this is we're well above the 50 hour. Look how far above we are. Okay? We're well above it. And on the daily, we already saw that we had 2 really good green days, I think. All right? There's no reason not to go long here. Okay? I should say, to be specifically, no reason not to go long here, right there. And to go long right at the top of that wick. So you'd go long from this point all the way up. How much long? Let's look at the range. 3250, guys. Huge range. Even if this was a quarter. Okay? So what's a quarter of 32? About 8. Okay? That leaves you 24. I'm just ballparking this. That means you probably had about 24 points worth of trading here. Absolutely huge. That is big money. Whether you're trading the MES, the E-micro, if you got a bigger account, you might be trading the ES. Some of you are probably trading options. Some of you might be trading ETFs, whatever. Okay? I don't trade all that. I usually trade futures, and occasionally I trade options. Okay? So this was the big money maker right there, in my opinion, today, was about 3/4 of this green candlestick. If that's all you traded was 24 points today, I guarantee if you did that, you made decent money. Matter of fact, you could have made a lot of money. And I'm going to say this again. I've mentioned this before. Would you be happy with $100 a day? $200 a day? $300-400 a day? Think about it. Would you be happy $100 a day, $500 a week? That's $25,000 a year. What about 200? It's $50,000 a year. So be realistic, guys and gals. Okay? Be realistic. Be smart about your trading. Always use your stop losses. Okay? Proper risk management. Don't leave your positions hanging. Okay? No reason to look at the 5-minute chart, because this right here was the trade of the day on the S&P 500 right there. All right, let's switch over to crude oil. Okay, let me go to the daily. I can already just tell by looking at the hourly chart that there was opportunity in crude oil. Now, crude oil has been beaten up, obviously. It's well below the 50. It's been staying below the 50. Okay? It's trying to get back up to the 50. Forget that little candlestick right there. That's the new session. We're talking about this candlestick right here. Okay, does anybody notice that the S&P 500 and crude oil exactly have the same thing going on? The same exact pattern. Except for crude oil has been beaten up well below the 50, whereas S&P 500 has been pumped up above the 50. But the same pattern, same 2 days, green candlesticks. Now, crude oil looks strong to me. It looks strong, guys. It's below the 50, but this is pretty strong. Okay, so today, even though normally I would say don't trade long below the 50, I would have traded, if I was trading today, but I wasn't. I was busy doing other stuff, but I would have traded that candlestick today as soon as it got above the upper wick. Okay, yes, I would have taken the risk to do it even though we're well below the 50. For those that don't know, new members, I usually don't trade long below the 50. I would only trade short. Okay, if I'm above the 50, I'm trading long. If I'm below the 50, I'm trading short. But there's times it's okay to break that rule. And today was definitely one of those times. The MACD looks strong. Short-term indicators look strong. Okay, go for it. Looks like the daily cycle. Pause the video. Make notes of the daily cycle, guys. I'll even put the little mouse right there. This daily cycle was about 1222, which basically was today. So look, guys, how good is this cycle analysis? This was 1220. It was forecasted for 1222. Okay? That's a beautiful thing, guys. It's so useful. Look at this. Up with the cycles. The new cycle came in, the price went up. It stalled sideways, as I talk about this all the time, in the middle of the cycle. Where's the middle of the cycle? Right there. This arc, we're talking about this arc. It stalled right in the middle for like a better part of a week. a week's worth of trading, and then it came down. It came down a little early. So what? Who cares? Take advantage of it. You could see it coming, right? You just take advantage of it. Cycle analysis, guys. Very powerful. A lot of money being made with cycle analysis. Look at this one. Look at this one. Bam. That one was useful information. It stalled right here. You know what that tells you? Very strong. That tells you the next cycle is going to be strong. It's going to go up. It did. Blast off. Look at this one. Red candlestick in that one. Right in the middle of the cycle. What does that tell you? Strong. Because you didn't get a big down. Well, you got a little bit right in the middle of the cycle. Very, very solid. It only came down for one day. Okay. Okay. So anyway. I'm not saying you should trust cycle analysis. I'm saying use it as part of your toolkit to help you be a better trader. It is extremely useful, especially on things like crude oil. Okay, S&P 500 is highly manipulated, not as reliable. Crude oil is manipulated too, but not as bad. Okay, so anyway, I would have traded this long today as soon as I got above that upper wick on that candlestick. That's all there is to it. It's really that simple. Okay, let's look at the monthly. Okay, nice green candlestick for this month. Okay, there might be some strength trying to get in here, but this month is coming to a close in about 8 or 9 days, I guess. So I'm going to guess there's 5, 6, 7 trading days in there, whatever it is. Okay, so if this yellow dot and this yellow dot are still there at the end of this month, it may suggest that we have a divergence going on. It's kind of hard to tell right now if this is going to be a little bottom. If it is, then these dots would be what I would call false flags, but we don't know that yet. Okay, for right now, we'll take them as legit. Okay, but it's possible because of this big red candlestick. That was the down part, and we may get that. All right. So far though, this month looks pretty strong. It's managed to stay above the 50-month moving average, okay? So we'll continue to watch that. Let's look at the weekly. Okay, a little bit of strength coming into the weekly chart for crude oil. Will it turn and come up? Will this kind of do the old crossover? Okay, is that going to happen? Are we going to start getting like whatever, something like that, and this crossover, you know what I mean? Does it do that? Right now it's tracking along the 50-week. Little bit of strength, but not a whole lot, not yet. Okay? Okay, let's look at the hourly. Okay, what do I see in the hourly? Well, what I see is opportunity, crazy opportunity today. Now, just for those that want to know, on the hourly chart, right now as it stands, we have divergence warnings. That means price decline is very possible. Now, will it just be one of these kind of deals? Okay, like we got there. Will it be a little bit more like that? Okay, but we do have divergence warnings going on here. Okay, so just be aware of that on the short term, very short term, kind of intraday or overnight session kind of thing for the next session. The next 23 hours, whatever it is, okay, or 20 hours left in this session, whatever it is, I got 19 hours, whatever, okay, there could be a price decline. It's possible because we're seeing divergence warnings, okay? That's the very first thing that stands out here, okay? So I see some weakness possibly coming in on crude oil. Be aware of that. It could happen. Short term, okay? But let's talk about this session that just passed, today's session, okay? None of that's tradable, okay? But y'all know what I'm going to say. Y'all know what I'm going to say. What was this? What time was that? Well, that was 9 a.m. Okay, so that 9 a.m. Texas time. Okay, so that candlestick right there, which was 10 a.m. Okay, I would have traded any part of that candlestick above that upper wick. For aggressive traders, they could have traded anything above that body. As soon as it got above the body, you could trade it. But for those who want to be a little bit more cautious, you would have traded just a little bit of that upper wick. Okay, when it came back down and closed right there, this whole candlestick, this next whole candlestick was tradable. The whole thing, okay, is pretty much tradable by then. This whole candlestick is tradable. This whole candlestick is tradable. There's a little bit you got to deal with that lower wick, so you either stop out and wait for it to play nice, Okay, but at least those 3 candlesticks, and and probably some of that one was all tradable today. Lots of money should have been made on 3 or 4 hours of the trading on crude oil. Okay, let's move on to natural gas. Natural gas. Let's go look at the daily. Okay, still kind of sideways chop going on. What I mean by that is you're kind of in this really tight channel. Okay, there's been some opportunity here last 3 days, which that would be more intraday stuff. I would not recommend, I don't give recommendations, by the way, this is an opinion only. My opinion is I wouldn't swing trade this. I see some strength here in natural gas. Okay, there's some strength. It's showing up. We're seeing a little gap starting to develop on the MACD. That's a good thing for those that might want to trade long. Be mindful, you're really far below the 50-day moving average. So it's dangerous, in my opinion, to trade long. Okay. Really, a lot of damage was done here. Tough to trade long this far below the 50. Let's look at the monthly. A lot of divergence warnings here, at least enough to make me say this may not be over. May not be over. Okay, but it could be. Could be. This could be it. Okay, could be it. Okay, yeah, it's very possible that that's it. All right, we'll have to wait to see there, because there's room down here. But the Big Daddy's kind of getting, Big Daddy could come down to like what that one did, guys. And then as soon as it touches, doing. Okay, so we got to really watch that. That's long term. We could see the bottom on natural gas. It's possible that it's coming into place here. Okay, Big Daddy says we're going up. MACD's got 2 shipping freighters that could fit through that. That's huge. And this is starting to try to turn. Okay. Still riding the 50. On the weekly, we got green, we got red, we got green. It's going to have to tell us more, guys. It's got to tell us. This is not, I would not trade long. I wouldn't trade short. I would not swing trade anything on natural gas right now. Let's go look at the hourly. Now, the hourly, my guess is it's tradable. Okay. Tradable. This is the session that just ended. Okay, ignore all that for now. That's the new session. Was it tradable? Oh, heck yes, it was tradable. Again, on the daily, we're well below the 50, so you got to be cautious trading long. But for aggressive traders, I would have started trading right there on that candlestick. And you had 1, 2, 3, 4 nice candlesticks to trade today. Lots of money could have been made on natural gas today for aggressive traders. Okay? And this part of the MACD could give you some confidence. When did that MACD cross over? About right there, guys. Okay, so for cautious traders, okay, so aggressive meaning you're trading intraday well below the 50-day moving average, that's aggressive. Okay, but within the context of hourly trading, right, intraday trading, for those that want to be a little bit more cautious within that context, you would have waited till about this candlestick. Because then you still start seeing some separation from the MACD. Okay, now the SMI is saying, wait a minute, I'm way up here. Why are you waiting so long to trade? Well, you're just getting confirmation from the MACD, getting them to play nice. Okay, and you got about 3 good candlesticks out of it. My goodness, that was some good trading right there. Okay, let's move on to wheat, which also looks like a banging day. Banging day, my goodness. Look at wheat, guys. Oh my gosh, to the moon. This thing could. Guys, wheat just might blast off. By the way, I closed any positions I had in oats. We'll talk about that in a minute. I made some nice money there. I gave back like about $100. I made like $1,500 or $1,800 on oats the other day, and then I noticed it kind of creeping up. We'll talk about that when I get there, but basically for those that want to know on oats, I closed my position. I gave back about $100. I'm a happy camper, man. That's trading. That's the way you do it, guys. Okay, so let's look at wheat here. I think this could go to the moon. It's looking like it's ready to go to the moon. If it crosses over as hard as it's indicating, this baby could take off. Okay, so we'll have to keep an eye on that. But right now, that's looking, guys. Right now, I think wheat is a long side trade for swing traders. I think it's you're almost ready if you want to do a swing trade to trade long. Okay, would have been better to trade long right there. My opinion only. Make sure you have your risk management really in place for trading grains, guys. Because it can change like that. You're $1,000 up, $1,000 down, just like that on one contract. Don't forget on these You can trade XW if you want to get less exposure, and the margin on this is really nice. Okay, and you won't be dinged as bad if your entry is bad. But in any case, I feel like it's a little late to take a long side trade, but I still think in the long run, it's probably going to be a good trade. You just might want to wait for better timing when this does a dippy-do and then comes back up again. That would be the time when it makes that crossover here on the SMI and takes off again, or maybe it goes like that and crosses over there. You might want to wait for that. Okay, but it looks like it could potentially be a long side trade going into the first quarter of 2022. Okay, let's look at the monthly. Nice strong, right? This is just Greensville. There's divergence warnings here, and that's hard to ignore, man. That divergence warning right there, like I said several times over the last couple weeks, if it stays there through the end of December, then we need to pay attention that even though the daily looks strong, this would be speaking volumes to us. We would have to really contemplate where is we going, okay? Because we have the monthly telling us watch out below, and the daily could be telling us long side. That's totally acceptable. You could still trade long on the daily and being very mindful of the monthly as it's giving you the warnings of downside risk. But we'll cross that bridge when time comes. Right now it looks strong, and there's some indications of divergence creeping in here. Okay, let's look at the weekly. Getting some strength in here. This hasn't turned yet. That's very flat. Nice strong week. Okay, a big buffer zone here between the 50 weeks. So, on the weekly, I wouldn't say you could take a swing trade long. Definitely not. But on the daily, I would. But the timing you may have to wait on better timing for that swing trade on the daily. Let's look at the hourly. Looking at the hourly here. Okay, this is the new session from here to here. I don't know what to say here, other than why wouldn't you trade this? Wheat has been so doggone tradable. So tradable. Crazy tradable. All that from that candlestick on was tradable. Okay. This candlestick was tradable. That one. Stop loss on that. Maybe give a little bit back. That one. Oh my gosh, that was a huge candlestick. This one. Okay. There was a lot. Out of all these candlesticks, whatever it is, 10 candlesticks here, probably 6 to 8 of them was tradable. And probably 70, 80% of the time you were making money, and 20 or 30% of the time, something like that, you're giving a little bit back on stop losses. Guys and gals, that's real trading. For those of you who get emotional about giving some money back, get over it. That's why we use stop losses. We give a little bit back when we're wrong. It's okay to be wrong. Or not even wrong. It's okay to be not perfect at every little trade. It's okay. Take a deep breath. You just want to catch most of this trading. On the red ones and the long lower wicks, okay, you gave a little bit back. You just gotta understand stop losses and use them to your advantage so that you only stop out on small losses, but you maximize the profitable side of the trade. Everybody understand? That's where the craft and the art of trading comes in. Okay, small tiny losses on your stop losses and big gains on the trailing stops, or if you're going to manually move your stops, whatever you got to do, okay? That's how we do it. That's how traders do it, okay? All right, let's move on to oats. Okay, just for the record, and I mentioned this before, I don't trade oats intraday. It's too thinly traded. Okay, so what's going on with oats? So I entered oats somewhere, I don't remember exactly what it was, somewhere over here. I was a terrible entry. I think it was on this candlestick right here, guys, this green one. I can't remember exactly where it was. Okay, I entered it like way down here like a bonehead. I wasn't, I should have known there was going to be a bounce off of it. I get it wrong too, guys. It happens. But what I didn't get wrong was I noticed the MACD was telling me everything's going to be all right. And even though I had to wait like an entire week, MACD told me everything was going to be all right. Everything will be all right. Okay, so that's how I traded this swing trade. Even though my entry stunk on this green candlestick for a short side trade, MACD told me you're good to go. I had to wait through this junk. Okay, I should have been more patient and should have realized on the shorter time frame, I should have waited for this to bottom out. I got a little bit anxious, okay, and got in there a little too at the wrong time. But it's okay. It got below here, got here. I closed out a trade for about 15 to 1800 bucks. I can't remember what it was, guys. Somewhere in that area. And I think it was this candlestick right here, guys. I was up like 200 more bucks down in this lower wick. I was busy doing other stuff. I was really should have been more on top of my game. I gave back like about 100 bucks, I think, somewhere in here. Closed out the position. I think it was last night or yesterday, whatever it was. And I gave back 100 bucks. So out of the 15 or 1800, I gave back 100. Guess what? I'm super happy. Super happy. It was a great trade. You know, I'm going to work on my entry getting a little bit better because I never traded oats before. All right. I've traded other grains, corn and wheat, but oats was a new one. It's thinly traded, so I had to kind of adjust. But I made a nice swing trade profit. Okay. All right. Let's look at. So, okay, before I go any further, what do I see in the daily? Well, there's definitely some strength creeping back in here, right? The MACD hasn't caught up with it yet. Excuse me. And maybe it will, maybe it won't. Right now we're below the 50-day. I'd be super cautious. I wouldn't trade it long. Okay? I just wouldn't. A lot of damage, if you will, has been done. Okay? So I wouldn't trade it long. I wouldn't swing trade this right now. I think swing trade time is over. I think that's come and gone. Okay? So I would just wait. It's not a swing trade time right now. It's time to relax a little bit. Below the 50, I just wouldn't trade it long, and I wouldn't trade it short either. I'd just chill out. Let's look at the monthly. Okay, we got, you know, with oats is different than wheats. Yeah. Oats is different than wheat. See, these divergence dots on oats, if I can get this thing to stop goofing around. These are divergence dots on oats. Those don't seem like false flags to me, but just based on what we're seeing here. Okay, I don't think they're false flags. They look legit. But, and this is just so, oh my gosh. That's craziness. You know, I haven't mentioned this in a while, guys, but, and I'm just going to cover it here real quick. Why do I think oats is still a really great product that's going to be traded? And I think it's going to come good again, okay? Because I have an eye for really long-term trends without even having to get overly technical. I can just look at this chart right here, guys, and I can tell you the approximate average on this chart. It's about right in here. It's just like somewhere right in there, okay? I can just tell by looking at the price action. It's in this zone, okay? And that's, let's just call it, even being conservative, even if we did this line, which is above the average, okay? $400, guys. It's going to happen. Oats will come back to $400, and I think it'll come back even lower. I think it's going to do $350. It will happen. It may take a year or two, or it could happen fast. I don't know. Okay, look at it happen here. Look at this. It took an entire year and a half and another half a year, whatever, like a whole year for it to come back down. Look at this one. It took literally 3 years, guys. 1 year, 2 years, 3 years. 3 years before it finally bottomed. And that's what this is all about. Okay, for those who want to know super long-term monthly chart stuff, what's going to happen with oats? It will come down. Now, it may, whatever. It's going to come down. Okay? And this rising 50 month will probably begin to flatten out. Okay, at some point, whatever. I don't know exactly when. And it doesn't really matter. I don't need to know the exact. I just have to watch it. And this bad boy will come down to 400s. Mark my words, oats will come down to 400 points. And of course, since we're talking about futures contracts or options against this, if there are options, I'm not sure if there is, it probably is. Okay, you're going to have to time all that. Okay. And you could do get into entries, okay, and you could take contracts way out in the future. You could. That's, I'm not telling anybody to do that. I'm just saying that's one way to play this. If you can even take a position with those contracts way out in the future, because oats is so thinly traded. But in any case, however it's played and however this is going to play out, and the way that you would take advantage of it, okay, I believe we'll come back down to 400 points on oats. We're at 691. We may get a little bouncy going into the early part of 2022, and then I think it's bombs away. Okay? And I'm going to try to stay away from politics, guys and gals, but I'm just going to keep this very generic. Whatever's in the White House right now, it ain't going to be there forever. You know what I'm saying? Whatever's up there in the White House now, and none of the little tricks and games that are going on up there in the old DC world, they ain't going to be there forever. Okay? And all this nonsense that's going on, and all this manipulation, guys, it ain't going to be there forever, guys. This will come down. Okay? All right. Let's go take a look at the weekly. Weekly. Big Daddy starting to show something. These look like false flags to me. This hasn't done the business of turning yet. Big Daddy's starting to. MACD still crossing over. You know, we'll see what happens. This is a very interesting time for oats on the weekly chart, okay? What I mean by it is I see long-term weakness. It may not all, it probably all won't come all at once, right? But, you know, I see whatever. It could do the old bouncy, 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 and then it comes in, and then it does more bouncy, bouncy, and then bouncy, bouncy. You know how the market is, right? Everybody follow me? Long term, oats looks weak. Short term, could get a bounce. The SMI isn't playing nice yet with that projection, okay? But it looks like, and oats has a very weak daily cycle. I'll go back to the daily cycle. This is the weekly chart. So there could be a bounce. Long term, though, I think oats is still weak. All right, let's go look back at the daily for a second and finish up this video for the premium members. Okay, click on that. What do we got? So there's a you know, a very weak WEAK defined daily low out of January 30th, 2022. This cycle, these cycles on oats are they're not reliable, so I don't really put a lot of credence in them because they're just not very reliable. Oats is not that kind of product that the cycles are obvious. Okay, so anyway, I'm just mentioning that'd be out at the very end of January, but don't worry about that too much. Okay, I'm not gonna look at the hourly chart because it's not something for intraday. Oats is not an intraday product. All right. Okay, that's it for premium members. I'm going to keep this video going and swing over to the live and feeder cattle, but that's it for premium members right now. Okay, guys and gals, talk to you all real soon again next time.